Let's check in on the Sensex and Nifty 50, the most important indicators of the Indian stock market. The Sensex, which tracks 30 of the biggest companies on the Bombay Stock Exchange, finished at 78,472.87 points. That's down just 67 points, or 0.09%, from yesterday. The Nifty 50, which tracks the top 50 companies on the National Stock Exchange, ended at 23,727.65 points. It dropped 25.80 points, or 0.11%. This shows a balanced market. There were small dips, but things stayed mostly the same. It looks like there was an equal amount of buying and selling, so neither really took over. The quiet day in the Indian stock market is mainly because of the holidays. During this time of year, many traders and investors take time off to spend with their families and friends, leading to a noticeable drop in trading activity. With Christmas tomorrow, fewer people are trading, and that means less activity overall. The festive season brings a sense of calm to the usually bustling trading floors, as the focus shifts from market movements to holiday celebrations. This is normal for the holidays, as people take time off to celebrate. The reduced number of active traders results in lower trading volumes and less volatility in the market. There wasn't any big news either, which also kept things calm. Without major economic announcements or significant corporate news, the market remains steady and uneventful. Without any new information, investors are waiting for a clearer picture before making any big decisions. This cautious approach is typical during periods of uncertainty or when the market is in a holding pattern. This wait-and-see approach makes sense, especially during a shorter trading week. With fewer trading days, investors prefer to hold off on making significant moves until they have more information. Experts think this cautious feeling will continue for the next few days, and trading will likely stay slow. Analysts predict that the market will remain in this subdued state until after the holidays. With no big news expected and New Year's coming up, the market will probably stay steady until the new year begins. The anticipation of the new year brings a sense of optimism, but for now, the market remains calm. This quiet time gives investors a chance to look at their investments and plan for next year. It's an opportunity to reflect on the past year's performance and strategize for future growth and success. Even on a slow day, some stocks go up and some go down. The stock market is always full of surprises, and today was no different. Let's dive into the details of today's top performers and those that didn't fare so well. Of the 50 big companies in the Nifty 50, 28 went down and 22 went up. This mix of gains and losses is a typical day in the market, reflecting the dynamic nature of stock trading. Among the winners, Tata Motors did really well. The company's stock saw a significant increase, driven by strong sales figures and positive market sentiment. Adani Enterprises also had a good day, along with Eicher Motors, the company that makes Royal Enfield motorcycles. Both companies benefited from favorable market conditions and investor confidence. Nestlé India and BPCL, an oil and gas company, also finished higher. Nestlé's strong brand presence and BPCL's robust performance in the energy sector contributed to their gains. On the other side, Power Grid Corporation had the biggest drop, followed by JSW Steel and SBI Life. These companies faced challenges that impacted their stock prices negatively. Titan Company and Infosys also went down. Despite their strong market positions, they couldn't escape the downward trend affecting their sectors today. The Sensex showed a similar story. It mirrored the mixed performance seen in the Nifty 50, with some stocks rising and others falling. Tata Motors was the biggest winner, followed by ITC and Nestlé India. These companies managed to capture investor interest and posted impressive gains. Power Grid Corporation, unfortunately, was the biggest loser on the Sensex too. The company's stock faced significant selling pressure, leading to a notable decline.